I'm back for another episode of We Fixed Real Estate with Fred Glick and René Perez. René's on the road today. How's it going, René?
It's fairly cold down here in Seattle, so
Oh,
I don't know if I like that. I meant SoCal. That's all I'm
Well,
gonna say.
well, it's SoCal winter where it's like 50 something at night. So it's freezing. We're all wearing, heavy coats and wool hats and sweaters and gloves and long everything. So yeah, then daytime goes up to 70 and then it gets cold again.
yeah. So you're heading.
Weather.
So let's
Happy
see,
El
guys,
Nino.
top of mind for today that I see just came out. The new Case-Shiller Index shows that housing prices are continue to rise 3.9% year over year, even though high interest mortgage rates. What are your thoughts on that, Fred?
Blah, 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 blah. It's a national report. Doesn't mean diddly squat for your local market. Here's the thing. Ignore all these reports. You think, we have people coming up. I want to negotiate a lower price because of this report that came out and because interest rates were higher. Well, let me tell you something. In California, for a really nice house in a really nice neighborhood with really good schools that's priced right, they could care less about that. As a matter of fact, they don't care about that. It's forward. We're still in a forward market for those kind of properties. Ready? Show me the money. That's it. Thank you very much. Goodbye.
And I will just increasingly disagree with Fred here because
Good.
it is a huge generalization. People don't care about money. If people didn't care about money, they'd be buying things left and right, overbidding 100K all the time. You wouldn't have the counter offer situations, right? So people do care about money. People do care about interest rates. They're ignoring things. They're deciding to ignore things because they're tired of not being able to buy something, but they do care, right? So it's not, it's not.
They do care, but they understand the situation. And what I'm trying to say is on these particular houses, it's where there's no competition. Look, you're not going to just throw some insane number out there and we'll give you some guidance as to what to bid. But it's still, most of our clients come in here, they're putting at least 20% down. They could put more down. Their debt ratio is way below what the maximum debt ratio is. And, this is for the type of buyer that's in these kind of areas in California, in the nice areas with the nice houses, with the nice school districts. Now, you're trying to buy a condo in, I don't know, Long Beach that's selling for $350. You got some play, and interest rates are kind of important there because it throws out buyers. I heard some stat that for every half a point in rate, it changes the qualifications of 1 million potential buyers.
Wow.
It's a big number of what people qualify for. And yeah, I could see in a lot of areas, in most areas probably, that's going to be a factor. But for California, even Seattle area, the rates stuck. They're coming down. They come down way over a point and a half.
Here's what I'll give you. Interest rates won't matter in markets like California, Washington, even Oregon, all the West Coast, because instead of getting a conventional loan, you're getting the golden egg loan, which is a parent loan. I mean, if you look at articles right now,
What's a golden egg loan?
Well, I mean, I'm just kind of using an analogy there. I'm just saying it's a nice, safer loan, which is just asking parents for money. That's where you see a lot of our clients, and a lot of people in general getting their money from. Like, hey, look, I can't afford the house, but hey, my parents are going to sell stock and help us with a down payment, help us with the full purchase price. So that's why Corey will ignore the high rates.
Then that makes for more buyers with more competition.
That's why I'm giving you that. I'm giving you that point there, Fred.
No, and there's regular old cash buyers. We've had a bunch of them. So, the bottom line here, as I said, is kind of ignore the number. Go on Redfin, look at the houses you're interested in the particular market. You'll see the prices, you'll see the sales, but no agent is going to say, oh, okay, we'll give it to you lower because the interest rates are high or because of some other ridiculous thing. So for negotiating purposes, everybody knows everything's public and there's nothing you can use to do that, to use that in negotiation, because everybody knows it. There's, it's got to be property specific when you're negotiating. It's like, hey, there's going to be a mall built across the street, which is going to have tons of traffic. Yeah, that's going to lower the value of the property, maybe. The bottom line is all real estate is local. Look at the local. Don't look at the national numbers because it's not going to really affect anything. We're coming out of this high interest rate thing, CPI, PPI, the core rates, everything's down, going to keep coming down. There's no reason for the Fed to raise another dime. Their next move is they'll stay the same. Eventually, 2, 3, 4 months from now, you'll see them come down a quarter. This is where the fine tuning of the Fed happens to keep us out of recession and to lower the interest rates back down to where people can do money. Here's the biggest problem that I see. The job market's been fine. Businesses are fine, even with high interest rates. In 1980, you had high interest rates, so you could lower them because of business spending and things like that. This is a whole different economy, a whole different world how it works. So I think we're just going to keep rocking and rolling. Rates are going to come down. And there's going to be things like the pipeline of goods and services flowing like crazy. China needs the money now. They're hurting. They're going to produce as much as they can. They don't care what it eventually sells for. They don't really care right now what it sells for. They just need to keep people working. There's, gazillion billion people there and they need jobs. And they built their whole economy on, making junk in the beginning and then manufacturing other stuff. And so
I don't see rates going lower, meaningfully in the next year. I don't see them lowering until 2025. And what I will give a little prognosis is China invading Taiwan. That's what I see happening in the next second.
Okay, we're not getting here. We're going to cover different podcasts, but
we're all speculating here. That's what I'm going to speculate.
Well,
that's a big speculation. Let's speculate. Yeah. Well,
so here's the thing, Drew. So here's the thing. 2 years ago, when COVID was kind of on its last leg, I kept telling Fred. Everybody kept telling Fred. We kept telling. Everyone was saying, "Oh, interest rates were not going to go past 5." I was probably one of the few people who said interest rates will get to 8%. Now that 8%, right? So it's one of those things that it can happen. There are a lot of proxy wars going on. There's a lot of conflict. How do countries or how do economies get out of a bad environment? By war, right? It's just simple. So we don't know. We don't know if they're going to stay high or low, but they're at 8%. The reality is rates did hit 8%. And you swore, you said the rates are not going to go higher, and you fought back and forth with clients, and it's
and look how quickly they came off of 8%. Yeah, it was to market calculation that they went overboard, and they realized they went overboard.
Now, from a newbie, from somebody that's outside of the real estate industry, just being a charismatic guest host, I do have a question for the everyman. Now, with the interest rates still high, why has the prices of houses not dropped?
Supply and demand, period.
Mm-hmm.
There's plenty of people qualified. That's not a problem. For every single house in the United States, there are plenty of people, mortgage or cash, qualified to buy that house.
Mm-hmm.
The next step is demand. Like, for example, I'm looking at an expired listing in Menlo Park on a condo. And I looked at the pictures. It's a picture like in the bedroom. The guy doesn't have the bed made. He's got a bicycle in the living room. The outside is not swept clean. It looks like crap. Well, how are you going to get anybody to even be interested in that? It's got a pretty house in a great neighborhood and where you want to live. There's tons of people in rentals. Rentals are starting to come down a little bit now. There's this whole thing of everything's getting cheaper. So it's getting cheaper. It's like, maybe we'll buy a house even though the rent came down $50. The worst thing is if the rates get back to even 4.5, that's going to bring so many more buyers.
Oh, yeah.
There's still not going to be a lot more sellers. So it's actually going to get worse when rates come down in California.
Supply and demand. And yeah. Now, what about going into the election year? Is there the emphasis that the Fed wanted to do maximum pain in 20?
Yeah, Fed's independent. They really are independent. I mean, they understand what's going on, but they're not going to make some ridiculous moves that's going to hurt things. So no, the Fed is always conservative. And, the two guys at the Fed that I've ever had a question about were Ben Bernanke and Alan Greenspan, because in the early 2000s, why did they not understand that an option arm mortgage, those arms that you got to pay 1%, were complete and utter bullshit and definitely going to kill the economy? Put no money down, get a 1% mortgage. Really? And it was deferred interest. It was the fancy name for negative amortization. You're paying it 1, but you owe it 7. Well, you got to make up the 6. And all of a sudden, here it comes. You go from $500 payment to $1,800 payment. You can't afford it, blah, blah, blah. Two geniuses, Ben Bernanke and Alan Greenspan, couldn't figure out that these were toxic assets, which they ended up being, and they could have saved the economy. So those are the two things of, the alleged conservative Fed that really screwed up. If they had pulled those loans, it would have been beautiful. Stopped all these bad mortgages from happening, even in the investor side. And we're seeing that now. I get all these emails. Oh, finance with us, your investment property, your Airbnb, but we have a little bit of, and it's just young guys. Hey, how you doing? It's like, you're idiots. You have no context. You're not giving your people details. And guess what? All these like groovy, you don't have to breathe loans for investors are back. And guess what's going to happen? They're going to foreclosure. They're going to be sold. And that's what kills markets too. It kills homeowners. It really hurts homeowners that people buy these investment properties with funky loans. And, the first time investors, they don't know what they're doing. I always tell first time investors, partner with somebody who knows what they're doing for your first deal. You don't get 100% of it. Maybe you get 50% of it, but you learn. And then you move on to your next one. You know what you're doing. So stop just going to some stupid seminar that you saw on LinkedIn by some guy. Make sure a great video. Okay.
Yeah. That's
deal in reality.
I mean, the seminars are fine if they can back it up with actual data, right? I mean, it's just everything's
they're just trying to sell you crap.
Well, that's what I'm saying. That's what I'm saying. I'm agreeing with you here.
Hey, that's a first today.
Yeah.
Well, let's see.
All right, we can be on this show.
Going into the holidays, we've got another month left of 23.
Fabulous. So last year at this time, between Thanksgiving and the Super Bowl, I should have just gone on vacation. There was literally nothing going on. People were freaked out. That's when rates first started to graduate up and kind of get scary and the weather got ugly. It just shut everything down. But what we did see is some sellers say, hey, I want to sell and I want to sell it. I'll sell at this price. This may be a really, really, really good time to buy. It hasn't started in earnest yet because we're only, what's today? Tuesday, November 28th. So, but you'll see maybe in a couple of weeks. Definitely, I love Christmas Day because I don't celebrate. So I'm there ready to write contracts. And I've done them on Christmas Day. Show vacant house, send an agreement on Christmas Day, get it back the next day, and you may get the deal.
I mean, it happened this year. I mean, we submitted offers on Thanksgiving, right? They didn't get accepted. But no, this is going to be like every other year, right? I mean, it's in a slower market, but people are still buying out there. That's just.
Yeah. So we'll see how this year develops, but usually it's kind of quiet. There's the whole thing with agents scared to death about all these changes in the commission deal. So they may want to push these sellers because they want their commission before all this happens. And by the way, if you list with us, we don't require you to put any buyer broker fee, and we will push that and push it out to people to let them know right in the advertisement, like in Redfin, it will say we are paying no buyer broker fee. So what happens is They'll go back to their agent who is charging 2.5%. And they'll say, oh, we don't want to buy that house because it's blah, 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 which is bullshit. And what we'll do for you if you come to us is very simple. Look, dual agency done by sleazy people is terrible. Dual agency meaning one person represents you and the seller, buyer and seller in a transaction. Here's the way we do it. If you come to us, we have one of our agents who has no idea what's going on with our individual listings. And we give her the buyers. So she's negotiating from the same position that your agent would be negotiating. And here's the thing. We're only going to charge you our flat fee of $97.50, not 2.5%. So guess what? You're getting the price for a lot lower. You're also going to be able to finance less money. So 80% of a lower amount. Calculate the interest. So we're saving. I mean, if we extrapolate it out for 30-year mortgage at $1 million, probably, $100,000 we're saving people between the commission and the lowering of the price. So that's the other thing when you list the house that you're not thinking of and the other agent's not telling you is they had the 2.5% period. They're not going to change that.
Mhm.
That's what their office is still requiring because NAR and Keller Williams and the rest of them are appealing the $1.8 billion verdict. Good luck. It's going to change. This is the way it's going to change. We're trying to be in the forefront of it. We're giving you a fixed fee for everything. It's it's so much lower. But anyway, that's that.
Now, without paying that, so help me understand. Without paying the buyer broker fee, Arrivva won't pay it. What if the people don't want to do the other side with Arrivva and stick?
That's fine. They can use their own broker, but they're going to pay 2.5% or whatever they charge.
You won't pay it, but the other people will pay it.
Let's just okay. So we take a listing. Okay, let's just extrapolate some numbers here. $1 million listing. We charge our $15,750 to do the listing for you. We buy the inspections. We do all the we do everything. And then the buyer broker fee. Let's say, well, here's the story. Here's what we will tell you. Okay, here's the buyer broker fee. We can put 0 and the buyers pay their own, or you could put $50. You could put 10,000 flat fee. You could put 2.5%. If you decide on the 2.5%, which is like to make sure that the other agents show the property. I mean, it's repulsive to have to do this because of their minimum commission situation. So some buyer goes and is not, didn't sign anything with agent from XYZ. They see the house. They want to make an offer. They say to their agent, we want to make an offer. The agent looks in the MLS or in the listing in Redfin and sees commission is 0. And he works for a company that says, you have to get 2.5%. And then he either like makes up something why you shouldn't buy that out. Oh, you shouldn't buy that because we know there's terrorists on the street or something. They just make crap up. Or they say, look, our company minimum commission is 2.5%. So that would be $25,000. Then the buyer said, thank you very much. We'll get back to you. They come to us and they only pay $97.50. So they'd saved a little over $15,000 on buying the house because they're using us instead of them. We have a firewall between the buyer broker and the listing agent. We make sure that neither finds out anything, and we can do what's called dual agency very clean. I call it that's the name. I can't even remember the name. Basically, it's not. You will not have the same person represent the buyer and seller.
It's called designated agency.
Thank you, René. Designated agent. So we designate a listing agent, designate a buyer agent. So it's safer that way. Yeah, there you go.
$97.50. No, that's such a deal. And I was just looking at the math on your site. Like for a seller for $1 million home, they can save up to $17,000.
That's just on the listing side. That doesn't include. We should have another thing on there that is instead of 2.5% shows 5%.
Yeah,
because 5% is what the total you'll pay. we're only saying pay us $15,750. If you want to pay anything else, that's on you.
No,
Buyer
okay.
broker.
I get it.
So you know what? Let's change it.
No, we will.
There-
We're going to figure out
There you go. We're changing our website live on the podcast, but yeah,
brainstorming.
we're going to
Yeah.
change it to 5% instead of 2.5%. So you can really see the massive savings.
I believe
Because-
that math was on there. The math
was on there, but it's 2.5.
We'll be doing some hot fixes on the website later today, guys.
Yeah. Okay. Moving on.
Check back in. I do have notes. Mention Keller Williams.
Keller Williams, one of the defendants in all the lawsuits about commissions. They had another thing going on at the same time with Gary Keller and some other dude and embezzlement and fraud. And what are these people doing? We're just trying to broker real estate. Really? I don't get it. That's why Keller Williams comment is, I don't get it. Why you want to work for them or why you want to work with them. Yeah, there's some great agents, don't get me wrong, but the company and just the philosophy, and they're fighting the lawsuit because they want to charge their 5% and all that. They think the old way of doing business is just fine.
And they say
Yeah.
they say there's value and they provide value, but as this real estate landscape shifts away from commission based to full service flat fee, there's all this value add that you're giving there, and there's a justifiable price for what you're adding to
Exactly.
what you're adding to that transaction, where suddenly it's not just a percentage of a house. It's actually tied to the value that you're added.
Yeah. And currently, if you use an agent who just got their license yesterday, you're going to pay the same price at Keller Williams with an agent who's been there for 10 years.
Mhm.
What kind of value are you getting there? You
Yeah.
know, I mean, the value thing is all a joke. We do absolutely everything that any of them would do. Plus, they've never heard of Slack. We talk to you on Slack. We're communicating with you all the time. Everything is as digital as possible.
Virtual staging, Matterport.
Everything. I mean, we put on the idea is when you have a listing on the multiple listing service, buyer contacts you about it, wants to see it or wants to know about it. You go to the MLS. It's the first thing we do. We look on the MLS. What's the showing instructions? How about disclosures? Anything like that? We do it. We get it out. Other agents, we have a listing and they just call up. Oh, I'd like to see the property today at 3:00. Go to the website. It tells you exactly how to do it. You have the link and, it's like, they don't understand. So if you're using an agent who still calls you on the phone, get rid of them
Mhm.
because or how about this? This is what I hate. They're using personal emails. This is a business. 98% of the agent, Gmail, Yahoo, AOL. Yes, AOL email for your real estate business. Really?
Mhm.
Just really? Just talk to different people.
Yeah.
They will tell you, oh, they're just discounters. You're not going to get anything. You know what? If we need to get you into a house, it's not an open house. Absolutely, 1000% we can do that. It's just like, it's a joke, but they have nothing else. So that's why they try to just
There you go. Well,
bitch slap us.
interesting times as we see. I think, the average house is it is a transaction. And as you go up into the 10, 20, 30, $40 million houses, these agents have listing presentations and they say what they're going to do to market it. But they're going to start marketing themselves as a marketing company, which whether they're going to buy a
Well, they all do that.
video.
It's all about, these agents and your personal brand. And my name's Susan Smith with the Susan Smith Group on Keller Williams. Nobody cares. I grew up in this neighborhood and nobody cares. You've been replaced by Google. You don't know the greatest restaurant because it's on Google ratings. Yeah, Yelp. There's the whole thing of you need a local agent. Why? Somebody explain to me why. Because I don't know. We do very well. We're all over California, all over Washington State. It's just been fine. And most people know where they want to live and know everything about the place before they.
I guess if
Think
you're
about it.
coming over from Europe and you got your job in San Diego and you don't know any of the neighborhoods, you may need a tour guide to show you some of the better neighborhoods. Maybe.
But you're looking on Redfin, you see what you like, you see the price range, it narrows it down for you. You look at the school district, everything is basically online. Yeah, if you want to like live, I have to live near 3 coffee shops that have a rating of 4 and above that have dark, coffee and bear claws. Okay, maybe somebody can help. Oh yeah, I had the bear claw there last week. It was fabulous. Really? And then are they the kind of person who knows how to negotiate for you?
Mm-hmm.
Who knows how to write a contract correctly, who can get information out of the other agents? It's a whole process. It's not that easy. René?
I think I'm going to keep my commentary for later.
Okay, good.
On that note,
right. Future episode.
Safe travels back to San Francisco, and we will see everyone next week.
Cheers.
Adios.